Hi, welcome back to my channel. Today I want to talk about grant loans. So grant loans are really exciting because it helps you to get into your house without putting as much money down or no money down in a lot of cases on the grant loans. And a lot of people are, you hear a lot of people saying, well, grant loans don't exist anymore. No, it's really specific to the company that you're going through. So you want to ask if grant programs are available when you're doing a loan. And so I'm going to go through the requirements on the ones that are available mostly in Clark County. I am licensed other places, but Clark County is where I'll do a lot of my business at, so that you kind of understand the requirement on these loans. There's one grant loan that will give you 2% towards your down payment and closing costs. And to be honest with you, the rates on that grant loan are better than like even normal FHA rates. So you're gonna get 2%, which kind of looks like free money. I mean, and who doesn't like free money? And then there's one grant program that will give you 4% towards your down payment and closing costs. So if you're going to do an FHA loan, that pays all of your down payment so that you don't have any down payment, and then it gives you a little bit towards your closing costs. And a lot of times you can get a seller to cover the rest of the closing costs. So in a lot of cases, you can get into the house on this program without any money down. So the first thing is that when you're doing a grant loan, you're going to be required to keep that loan for 3 years. So for 3 years, you're going to want to stay in the house. These are going to be primary residence loans, which means that you need to be able to live in the house and stay there for 3 years. So if eventually you're planning on turning it into an investment property and then moving into something else, you'll want to make sure that you live in it for 3 years, and then you could do with it what you want. Otherwise, you have to pay that grant back. If you're looking to sell the property, you're going to want to wait till you live in it for 3 years. Before you sell it. So that, just kind of keep that in mind. It's a 3-year commitment when you're doing the grants, because they're giving you the money up front, and then that's one of the requirements, that they want you to be in that. Because this is more to help people in Clark County receive home ownership. A lot of times these are given on first-time home buyers. Even though they're mostly given to first-time home buyers, you can have them if you don't own a current house right now. The next requirement that we want to look at is you have to have a credit score of a 660 or higher. Okay, so a 660. And keep in mind, don't get frustrated if your credit's a little bit below 660. Just give me a call, we'll run it, and I'll give you a game plan on what you need to do to be able to get it up there. But to do the grant loan, you're going to want a 660 credit score or higher. And then the next one is a 45% debt to income ratio. So what we'll do when we're calculating a loan is we're going to take your debts that are included on your credit report, like credit cards, student loans, car loans, and we're going to add those debts to your new house payment for this new house that you're purchasing. And then we're going to divide it by your income. And how we look at your income is your gross income. If you're like a W-2 employee, it's going to be before taxes are taken out. So that's how we're going to calculate that. And we have to keep you in a 45%. Don't worry about doing the calculations, because I'll do that for you. If you're self-employed, we do it a little bit different. So in self-employed, we're going to take your income after all your adjustments. And we have to keep that within a 45% debt to income ratio. The next requirement on a lot of the grants, but these ones in particular that I'm talking about, the 2% and the 4% program, all of them are going to have income limits. So they're mostly made for, lower to middle income. So these particular grants that I'm talking about, their income limits are $98,500 for your household income. So they're going to take your income and make sure that it's under that $98,500 to be able to fit into these grants. One of the other requirements is the loan amount. So when you're doing grants, there's specific loans, and when you're looking online, it'll say they can go up to $400,000, but that's on a conventional loan, and conventionals have stricter guidelines to your income. So that's kind of confusing when they do it like that. So what I'll try to tell people is that on these kind of grants, the best way to do it is to stay on an FHA loan, and then you want to stay within the county FHA limits, which in Clark County is $345,000. So you want to do a purchase price of like $356,000. That way, after the down payment and the grant comes into place, then your loan amounts at $345,000 or below. The final thing that I wanted to talk about that we kind of touched on before is a lot of these grants are going to require you to be a first-time home buyer, or they're going to require that you don't own a house right now. So if you've sold your house in a different state and then you're moving, like in this case, since we're talking about Clark County to Las Vegas, then you want to make sure that you don't own a current house, and then you're good. You can get the grant as long as you meet all their other requirements. So I hope this was informational for you, and you learned a little bit more on how grants work. It's an amazing thing to get into a grant because you can purchase a house, and if it's your first house, it just takes some of that stress over having to have the down payment together before you purchase it, and you can get into something, and really once you're into it, it's all about the equity that you're going to be building in that house. You're going to be able to build so much equity that when you then sell that house, you can roll that equity into the next house. So usually when you're doing a grant, you'll only have to do it one time, and then after that you're going to have equity that you're building up for owning the house for 3 years or more, and then you roll it into the next one. So anyway, if you have any questions, feel free to comment below, or you can call me at any time. We'll put my phone number on here as well, and I hope you have a great day. Better than me. So boy,